And with that, we are going to formally kick off our session today. Welcome to Intro to Angel Investing. This is the second session in the series. So if you missed the first one, talking about framework foundations of, what is angel investing, you can access that via recordings that we've made accessible to our member community. Also, it's up on our YouTube channel, and we will link to that for folks that are signed up today as well. But just to kind of remind you of where we are in this series, this is all about learning. It's all about, how do you get involved and what can you do to step into not just that investor mindset, but really into taking action so that you can show up and participate as an investor in the ecosystem. So the first session, again, was a little bit more foundational. Today, we're going to be talking about some more advanced concepts. It's going to be, what we look for as investors. Sometimes I'll say we as a group, we are an angel investment group that really leans into women and funding women and educating women around angel and getting them into, allocation roles. But I may also say this is how I invest because me as your kind of de facto leader today, even though we're really excited about all different folks stepping up into leadership with us, I may also just point to some examples of my portfolio of 40 plus investments where I've made decisions to invest and allocate as well. So, and sorry, I know the screen share, it's getting a little funny. Having something going on to try to change my canvas, so just ignore what's on the screen for a second. Okay, this is a little bit of a technical difficulty. Here, I'm gonna get it to work better. So here you go. This is what's coming up in the series. Today is, again, the concepts I mentioned. Next up in the series, we're going to be talking about allocation and what to expect. So you send the check, you make the decision, and then what's next? Portfolio, returns, taxes. So we're really talking about all of these fundamental things you need to either map a path to or step into investing. So that could be, this is your first time writing a check. Maybe you already wrote 10 checks. We want to level up the way you're thinking about that investment decision making, how you think of yourself as an investor, the framework, and then also, what does your portfolio look like? What are your expectations after you write the check? So that's a little bit of, what we're going to cover in terms of today in session two. Today, we're going to talk about, again, what we look for as investors. We're going to walk through, well, what is diligence? What's a data room? Right? Why is this something that you should probably see before you invest in a deal? We're also going to give you some real world examples of things that have happened. And sometimes you can call them red flags. Sometimes you can just say, oh, a deal, presented something and it looked a little scary or hairy. What did we do? And we're actually going to give you examples. They will be anonymized. We're not going to, tell you confidential things in the portfolio. But by the way, you're more than welcome to see what we've invested in. So we make all of this stuff really transparent, put it out there publicly into our actual investment member community. We make sure that, folks have access to all of the information, including the why we don't invest. They know all that information. They're a part of it. They're a part of influence and decision making with us. And then we'll talk about what's next if you're, furthering your journey in angel investing. All right. So this is, sorry, Canva's being a little funny here. What we look for. I think I figured it out now. All right. So at a high level, we're going to dive into each of these concepts. They're all foundational. And this doesn't mean it's everything. The way that we talk about, how we invest and what we look for, frankly, there's no way to fully explain to you, and these are all the check boxes. Also, if you're an investor that just uses check boxes, you probably have inherent bias. You're probably not funding women and diverse founders as we really lean into. But the point is, it's this kind of evolutionary organic waterfall. Not to scare you, but we can go in many directions. We're investing, we talked about this a bit in the first session. It's based on collective expertise, insight, curiosities. It's not just groupthink and, what happened in that spreadsheet that they shared with us. So let's talk about some of these foundational things that we look for as angels. And again, if you have questions and you say, Nat, what did that mean? Other people have that question. So again, you don't have to wait for later to engage if you have questions, thoughts, whatever you want to chime in with. But at a high level, team story, two different concepts, but I'm calling them one here. Risk reward, what's the opportunity? What can you potentially make on that? So again, I'm kind of widening these concepts, but sharing like how we're going to talk about it. Need or demand or market, right? Is there an actual need? And then ownership. So all things that we're diving into. So first, let's talk about team and story. And again, sorry about this. I'm going to change my view a little bit so that I don't have these issues with sharing. But let's talk about team first. So team is hugely impactful, like mic drop, so impactful when we're talking about Angel. Sorry, this is just, all right, please just go with it. I apologize for this. It's so impactful we're talking about this that literally investors, early stage investors, they might invest just based on the individuals and based on nothing else. Let me say that again. The team is so impactful, people may not even like the business. But at the end of the day, they may be so impressed with that team. They love the expertise, they love the grit and resilience. They've seen prior execution. Does not need to be success, by the way. I could see prior execution, failures, growth, learning, curiosity, and they're going after a problem I like. I'm not scared of failure. I'm scared of so many other things. And I think a lot of other investors out there too. But let's talk about this. In yesterday's conversation with Seth from Founder Group, which is a massive VC, they've had 3.5 billion under management. We talked a lot about ego. We talked a lot about, well, how do founders show up? And as investors, Seth and I, yes, I just put myself up there with Seth because guess what? If you're an investor, you're an investor. But I do have humility around it, I swear. If you're, looking at a founder to invest in and they don't have humility and they have too much ego, what does that mean? That means they're not going to be able to hire if the business outgrows them. That means they're not going to hire people that scare them, that are smarter than them, right? You're looking for things like humility, having an ego that's in check, having a curious founder team with aptitude in the thing that they're building. I'm so sick of every company talking about AI and they don't know what they're talking about when you try to dig in. Okay. Have you identified or do you have people on your team that can build the thing? Maybe there's part of it that's a next generation build, but can you at least start to solve that problem today? Right? And can you step back from your baby, that business, if it outgrows you? Or do you need to be the one at the helm, right, to take it to $1 billion? Because I get it again, right? Failures happen. Startups are so risky. And so, really looking at the team, what drives them, resiliency, I love it, right? Talk about social equity, talk about who is going to do the thing. I had a founder, diverse founder. She had just had a baby. Talk about resiliency. She was telling me how some men investors, male investors, were like, you just had a baby. Like, we're not going to invest in you. Like, literally. Is that not a founder you want to bet on? Who is, I'm not saying like, I need somebody who's like right now pregnant or having a baby. But my point is that doesn't scare me. To show up, to be doing the thing, that's amazing, right? And businesses, startups are so hard. Pivots, restarts, trying to keep the lights on, doing the right thing. I mean, that's who you want to invest in every time. So, and guess what? We figured out the deck, which now I feel really good about that. I'm not going to have any other screen issues. So just a quick pat on the back. I'm joking. But all right, story next. People invest in early stage deals off of story. And by the way, if you've ever sold something, enterprise sales, people aren't buying based on products and features. It's a story. How does this make me feel? How does it make the customers feel? The story around, a fundraising event. Why them? Why their team? It's everything. Because founders, right, telling that story and fundraising, like that's a hard thing. If they had to do it based on numbers, do you really think that they'd be, being able to get these valuations in the millions when they're early stage? No way. It's the story. It's where they're going. It's the vision that they're painting, that picture, right? Some execution might be helpful. And, depending on the team, we have as a business, or I should say, she's independent, our investment group, individual members, and me personally, have invested very early, sometimes out of maybe established accelerators, or we really like the founders or the vision of the product. But oftentimes we're investing what we call seed plus. So it's like execution doesn't need a bunch of sales, but they've done something, product build, digging in, and we'll talk about, kind of market analysis in a little bit, but it's a realistic idea or pathing. It doesn't have to be, this actually can happen tomorrow, but head in the clouds, that's too much. Maybe 1 foot on the ground, I want to see some practicality, but you need to sell a big vision if you are a founder. Like that's just the name of the game. If you are raising venture, if you are raising private capital at a high valuation. And that's what we're focused on, by the way, at She's Independent. So if you missed session one, I know some folks said that this might be, a new session for them. We define, what is angel and what is a venture trajectory, right? We talked about some of that in session one. And by the way, we're happy to have that conversation. We do office hours and, other forums where we can talk about it in more detail. And you don't just have to invest in angel, right? We're happy to talk about other deals, but our group right now is focused on that venture trajectory, right? Who's going big with a potential exit. And then also in story, is this an actual problem? Is there an actual need? Right? Tell me about the market. Tell me about competition. Really important stuff. And we'll talk a little bit about flags later of, oh, we don't have competition or, that kind of thing, because it's all important. By the way, if you don't have competition, you're new to market, right? You better have a good story about it. Why are you reinventing this thing? Is there a need? So we're going to talk a little bit more about this momentarily, but basically in the go-to-market, which I have up here calling it GTM, I am sick of founders saying, oh, there's a need. We haven't checked for it because we know there's a need. And listen, I get it. If you're a PhD, nothing against PhDs, Idong, we love you. But if you say, hey, this product needs to be out there, and so I invented it, and we say, well, great. How many people have you polled? Have you, checked on pricing? Like, no, it's needed, right? And that happens within some of these deeply technical medical fields. But that's not quite how you build the business that's going to be successful. So testing the market, maybe it's case studies, maybe it's, early users, it could be alpha or beta or, whatever you've built, but we want to know that you've tested and that you have data or you have stories or, people want to buy the thing or want you to build the thing, I should say. Right? Pipeline. Are you building pipeline in a reasonable way? And again, it depends on stage. But we had a business that we invested in and they already had 7,000 on their wait list at our pitch day. And then 700 pre-orders or $70,000 of pre-orders, like just really interesting numbers, right? Because they were building a pipeline. That was a medical device for women in osteopenia. Go-to-market plans and feasibility, right? If somebody doesn't know go-to-market, okay, do they know they don't know go-to-market? Do they have a hiring plan or do they have somebody with expertise? Do they have any idea what they're talking about? Does it sound at all possible? Also, is it scalable? What are the margins? And these are all things we ask about, right? At the end of the day, money matters. Money matters. And sure, maybe there's a big burn or you're losing a lot of money early on in this journey, but you have to get to a viable, sustainable business at some point, unless you're, run by men and raise billions of dollars. I'm just kidding. I'm gonna stop right there. But the point is, right? I make these jokes. They obviously have a lot of truth in them. But we care about, right? Where's the business going? How much are they going to need, right? How viable is this? And then other things like, okay, have you thought about pricing? Again, does this make sense? Is this thoughtful? Do they take feedback? Going back to that kind of founder hubris piece. If we have feedback, do they just kind of brush it off? Or they're like, oh, that's interesting. I'm not saying that we necessarily have the genius nugget that they need, but how do they respond to that, right? Because as an investor, you want to know that they're curious, evolving, getting better. Conversions, retention, engagement. Great, you have all these freemium users. What does the data look like? Okay. Don't just take their word for it because they might not even be trying to manipulate a conversation, but they're so positive and so excited. It can be pretty tough to get the real answers if you're not digging in. All right, let's keep going around, what we look for here. Money. Capital. First of all, if we, as She Is Independent, are writing a check for $70,000 as an example, because that right now is our average syndication size, and if we are only $70,000 and their burn, meaning how much they spend is, let's just make it up, $70,000 a month, we can only keep the lights on for 1 month. They have $1 million raise or a $2 million raise. If we just write a check for 70 grand and they can't get enough, excitement and galvanize a community of others to invest, and they need $1 million, like that's not going to work. And recognizing what type of investor are you? If I was, a bigger VC and I was like, all right, this check's $500,000, maybe I don't even care if other people invest. I'm throwing you that $500,000, right? At that stage. But recognizing where you show up on that investor journey and where you show up within their fundraise. Oh, we have some people we got to let in. All right, hold on 1 second. Oh, there we go. Oh, great. This is really exciting. Trista's joining us. I think she's in Japan. Trista, is this your first time being on live? I'm throwing you on the spot. I think she's still connecting to audio. But anyway, we'll keep going here. Hi, Trista. But basically recognizing, right, capital is a huge part of the story, right? What stage are they at? If they're so big already or the valuation is too big and you're getting such a minuscule piece of it, right? Do you even want to invest? Investment valuation, a possible exit. So what is the exit scenario? If we are investing and it's a $30 million valuation and the plausible exit is an acquisition for $60 or $75 million, that is not fun, right? These are risky investments when you're investing in angel. I want there to be a sub $10 million valuation if I'm thinking about something with a $50 to $100 million exit. It's called multiple expansion, meaning if I get in, right, and this thing pays off and they only can exit it maybe like 100 million, these things are risky. So I don't want a payoff of like 2x, right? I need a payoff of at least, I don't know, 10x. So thinking about things like, well, what's the valuation? Now, let me talk about another piece of this, which is I know investors that don't have a lot of investment experience. Let's call it what it is. And they literally won't invest if the valuation's over 30 million. They just throw out a number. What if this is a $300 million exit or $1 billion exit? Why would you just come up with a number, right? So I'm a big fan of, and the way that we talk about it and think about it and brainstorm, in our She's Independent Angel community is let's be logical, let's be smart, let's not be groupthink and just have a checkbox that is black or white. It's gray area, right? Like that's how life is. Let's be strategic. And understanding things like runway and burn and plan of action, right? It continues to be a tough funding environment. And so what happens if they have not much money in the bank or they can't complete the raise or they can't do the next raise? You can ask those questions. And by the way, it's important to navigate and ask tough questions. That's how you learn. That's how you uncover risk. If the team doesn't think there's any risk, like they don't know what they're doing. That's not who you want to invest in. I have some other words up here on the slide, such as, soft commits versus committed capital. There is a nomenclature and terminology in finance that might be new to you. Investing with others like us, we can talk about it. Basically, a soft commit just means someone's thinking about it. Hard commit, they're committed. So understanding things like, okay, you've raised or you have 500 soft circled on this raise of $1 million, right? Great, you're halfway there. Ownership. Let's keep talking about capital. Let's keep talking about who else is maybe playing or participating in that round. There are different terms that, again, might be a little foreign to you if you're newer to investing. And so we're here to kind of break that down. Strategics, strategic capital. I love strategic capital. Every investor should absolutely love strategic capital. Why? Strategic capital is, as an example, somebody who could be ultimately an acquirer of that business. They typically or almost always, maybe always have deep pockets, meaning money. They can fund future raises. They may be super connected within that industry, so they could make phenomenal referrals, get customers on board. right? There's different forms, but basically think of strategic money as it's not like investors who just invest as the core of what they do. People that invest professionally, that's called institutional capital or institutional investors. So venture capital, private equity, that's institutional capital. Do we like to see that? Yes, both of those. We like to see both of those. But it's okay if they're not participating. But it gives us more ammo or more information because institutional capital is paid to do the thing. They are paid to invest. They're paid, you know, manager fees or expenses on, you know, what they have under management. They're also charging more in different ways than, you know, an angel group, but they're paid to do the thing. And so they're going to pour over the numbers. They're going to have investor theses, you know, all the things, but they're going to look more at all of the different things in the data room. You know, hey, maybe you're having accountants look at X, Y, and Z. You know, does this stuff tie up? We're looking at the numbers too, but we're not paid to do it. And so the level at which we run diligence is different than institutional money. What else do we look for in terms of, you know, ownership? We dig in, we ask the questions, you know, what's your plan for future raises? What, you know, what is this going to look like? And is this raise going to be successful? And by the way, because a lot of times it'll take months to invest for us, right? Because it's screening and it's maybe getting to the pitch day and then it's running diligence. We want to see momentum, right? We want to see what's happening with the trajectory of the raise. Also, and this is a little bit of an aside, what does leadership look like? And I'm actually going to update that to say, you know, what's culture? Are you investing in key leadership, which brings in women and underrepresented folks? We care about the diversity. We care about the gender equity, right? And so if it's a group of men and they're saying, well, yes, we really care about the women and we're investing in them. And, you know, hey, this, you know, my second is a woman. When we look at ownership, the ownership of the business, and we see that she doesn't have enough ownership, we have a frank conversation about it. And we're not like bullies about it. We're like, hey, we noticed, you know, in the cap table, we talked about this in session 1, right? The ownership of the business. We noticed that Michelle, you know, she's your number 2 and she's doing all this great work, but it didn't look like she had enough ownership. So we literally have those conversations. We check on the way they show up and what they're doing. We don't want it just to be a checkbox. We want that to be how they are operating the business. All right. So that was ownership, by the way, investors, and then also talking a bit about employees. Diligence. Let's talk about the diligence process that we run. So again, we're not professional investors, but we're pretty darn good. We're pretty darn good because we have the likes of people from different backgrounds. Dr. Edong is an example of this on this call. She's one of our leaders. She had a background in healthcare and biotech and gov. So when she came to the table and said, hey, I can, you know, ask these questions, navigate this, she brought strategy and insight that somebody without that background didn't have. We are not groupthink. We are truly, you know, tapping into all these different, you know, folks that we have. And our process looks like connecting with, and I know it looks a little lengthy here, but compared to an institutional investor, this is pretty lean, right? We're connecting with other investors in the deal. We're connecting with who passed on the opportunity and digging into why. You know, we're talking to their team. We're talking to customers or future customers or partners. We're looking at numbers and background, right? What's actually happening, not just the story, but what's the quantitative. But qualitative matters too. Execution and competency throughout the raise. How are they working with us, right? You can see competency through a raise, even though that's not necessarily how they run their business. But you know what? There's probably a lot of like for like. So you can really learn a lot through diligence. And we make sure to share all the things. And let's talk about the data room. So first of all, my understanding is a lot of people will actually shut down mentally because they get a little worried when they hear the word data. It's okay. By the way, I love data. But the data room or the deal room, right? Like this is significant stuff. Do not shy away. And keep in mind, if you're investing alongside others who are skilled and, you know, proactive, they might be doing all that work for you. But don't be scared to check it out. What is a data room? What does it contain, right? Financials. What have they done? Maybe it's just forecasts. Maybe it's just projections. What kind of money do they need? Just assume projections, forecasts, assume it's all wrong. Okay, completely wrong because it always is. But what story does it tell? And does it also match up against what they said to you in the pitch, in the conversations? Then there are deal docs. You can literally review, the draft executables. If that's not in there, right, you can also ask for it. But it's documents related to the deal. It's other documents as well. Is there intellectual property? Maybe they're grants or testimonials, studies, deep dives into the technology, right? Great stuff to look at. The cap table, the capitalization of the business, we talked about it in session 1, but basically, what's that ownership breakdown? So again, really significant stuff for you to make sure the stuff that they're saying, this is stuff that actually is applicable. It's truthful. You do not want people fibbing or lying, throughout this process. You need to trust them. Proactive diligence. Do not just let them feed you information. The reason that angel investing and angel investing with a group is so much better than participating in a crowdfunding campaign. You're not just seeing the cherry-picked information, meaning the best of the best that they want you to see. We are going after those conversations. We are talking to investors. We are literally asking who didn't invest. We want to talk to them. We might be doing background checks or back channeling via things like LinkedIn, right? We're finding out information, uncovering it. And because we're writing a check that collectively is maybe 100 grand, maybe it's only 70 grand, but we have more kind of power and autonomy and the ability to do the thing. Whereas if you are investing as a small angel or through crowdfunding, you don't get that type of access. You're not in those rooms. Our proactive diligence, again, it is collaborative, it is creative. Collective insights are leveraged. And that's what's fun. We are investing in climate or healthcare or, a skincare product for women of color, people of color, right? We're able to invest in consumer goods on one hand and then a data product on the other because we're collectively coming together with expertise. But we have a framework to invest that's always evolving. And you have, people that have already done the thing or have finance backgrounds as well, me being one of those. But it's great, right? It's not just about the financials. It's all these things. It's creative thought. And when we come to an investment decision, it's so many things, right? It's not just a checkbox of, 1, 2, 3, but here's some of the things that we're looking for. Did the business satisfy to, the level of what we needed, what they said they did, and do they do that? Do they meet those goals or those things or those, statements that they've made? Do we like the risk reward profile? And also the potential exit profile? Do we remain excited? Do we have enough interest ultimately to syndicate, meaning come together so that we form this legal investment vehicle and we're getting checks and we're funding the deal? All really, really big questions. But, one of the other things, and I just want to point this out, do we remain excited? This is real because I can point to a business. I'm still thinking of it. I know Rachel also knows in the back of her head what I'm talking about. It was like we were so excited going in, and it was this financial expertise for, educating, the next generation of folks around personal finance, and we loved it. But just after all the deep dives, we're like, what's going on here? And it's not that anything was like a huge flag per se, but when we saw the mock-ups and we saw the demos and we had the conversations, like the enthusiasm didn't remain. And that's telling. We talk about gut instinct a lot of times as investors and as individuals. I'm going to remind you, your brain is processing way more information than you know. Our brains are supercomputers, right? So it's not just gut that might be saying, hey, I don't know if that's credible. I don't know if there's integrity there. You're taking a lived experience, and that's a part of investing. And that grows. Your confidence around that, your trust of that, your evolution of your investor mindset, that all grows. But don't shy away from really tapping into that. All right, let's talk about some red flags. There are a million, right? Anything that makes you feel like, wow, this is too good to be true. Just dig into this stuff. And by the way, I want to say quickly on the too good to be true, because I guess maybe it's too good to be true, but you realize that even really good money is investing. If everyone says it's the best investment ever, I'm just going to tell you it's not going to work out. It doesn't mean you shouldn't invest, okay? But, recognize that it's also a game of luck. It's a game of so many things. And that's why you build a portfolio. You don't just do one deal. Red flags. Ongoing raises with no hard commits. They keep punting the timeline. They keep saying it's going to happen. And I get it if it's a tough environment, but that is tough. And if you're getting zero hard commits, there's no way you're going to be able to close enough money if you need money to keep the lights on and to build the thing. It's not to say you need money. Some people are able to bootstrap alongside maybe a job or a part-time job, or get grants or go through SBA. There's different avenues. And I want to point that out because women and diverse founders, it is tougher to raise capital. So I do not want to discourage you, right? And there are other ways where you can demonstrate the thing. But I do want to point out, right, if this is an ongoing raise and you keep trying to raise, we need to reevaluate, or you should reevaluate and say, okay, maybe what's my pitch? And maybe the market's not ready for it. Maybe I need to build something first. The other thing is super small checks. If somebody says, yeah, we're raising, $300,000 or, $1 million, and we'll take a check of 2,500, a direct check of $2,500, that's a little scary to me. That means that founder doesn't know how to efficiently and professionally, I would even say, kind of raise a round at that type of, tier, because it's going to be a mess if you take a bunch of checks for $2,500. It's a mess. And that's why, as an angel group, we can take a check that's $2,500 because we will coordinate and we will do all the stuff so that it's one check or one wire, one line on the cap table, and it's much easier for that founder team. So, there's a reason they might launch a crowdfunding campaign. There's a reason they might want to work with an angel group. But individual checks that are super small, your spidey sense, right? You should have some of these flags going off. Except if you are very strategic, maybe you're a longtime friend, maybe you have so much expertise and you can only put in 2,500. These are things to be aware of. But again, if they're taking a bunch of checks that are really small individually, I'd be aware. Promise of a board or advisory seat for dollars, and they're not vetting who you are as a candidate. Big flag. I just talked to a woman the other day. She put $100,000 into a business for a board seat. She's like, oh my gosh, I should have vetted it, right? And I hear this story all the time, maybe even $10,000. Why throw away money? Make sure you are vetting the thing, right? Show up as an investor, you can make better decisions. Wild assumptions, we kind of talked about a little bit, hubris, lack of research or lack of knowledge on competition. I'm not saying I need them to know every little detail and walk me through every little detail of the market, but if they don't know it, that is a problem. All right, so now we're going to talk about investment scenarios or real examples that we've come across as investors and then what we did. So this hopefully should be, really informative. Again, it's not like we made the right decision or the wrong decision, but this is how we think. And this is something that we thought, putting our heads together, felt strategic and felt like the right move. Now, do we have exits yet? Not yet, because we started investing about 3 years ago as a group, and it takes on average, 7 years or so. But just giving you an example of some of the investment decisions we've made that we feel good about. So break even. How many times do these founders say, we're going to be break even or profitable in some short time frame? And they don't have a good story behind it. They're so out of touch with reality. And this was a business, the business that said this, it was a sexual health business, and we were so excited about it. But this was a crucial piece. And when we were talking about it later, we're just like, ooh, they're not going to achieve that. And if they don't know about the massive gap of knowledge or, again, just realizing how outside of reality they live, that's scary. And by the way, being even break even or profitable, that might not be the best thing for the business. They might need to actually burn a bunch to make, their growth trajectory do what investors want them, or need them to do in terms of getting to that next level. So just a few thoughts on break even and profitability. Sales estimates. One of the businesses had this kind of, I'll call it a wild assumption, going from 0 to 1,000 product units in sales. 0 to 1,000 product units in sales. We asked and dug in, well, what's the pipeline of demand? What's the ability in terms of, do you already have these partnerships scoped? And have you found out enough information where this is like feasible, plausible? And do you have, what you need in place to make this happen? We invested. So again, these are flags, but they're not no's. Always, it depends on the scenario. You want to dig in. Let's talk about some more of these examples from our portfolio. Competency. Unreadable files, lack of professionalism, lack of follow-up. Numerous founders fall into this category that we've evaluated. And by the way, I do want to say we won't tell them, hey, you were incompetent. I think it's really important to recognize as a investor, and also as an investor who feels deeply about wanting to support folks, but also show up and be honest. There are certain things that people will feel as an attack on character. So you want to be careful. I would say you want to be careful about how you communicate different things. But we'll tell you that in this room, and we'll tell you that, and we'll talk about it, in our rooms of investor conversations. You know, these are some tough ones. And if somebody's having trouble, getting through a raise, and they don't have competency to raise, again, what does that mean for future raises that are going to be harder? It's going to be bigger dollars. All right, investment scenario. You know what? I should redo these slides and it should literally not tell you what we did at the bottom. Gosh, I mean, talk about branding and marketing 101 probably. But anyway, numerous times, we have invested where the CEO wasn't the original founder of the idea, let's say. So actually, I should have said this differently. The CEO didn't maybe originate the thing. I should say that. Scientific and medical fields, right? A lot of times this is research, maybe faculty or a doctor come up with, but they're not the right person to run the business. Sometimes they are the right person to run the business. There's a company in our portfolio, and the scientific lead, or the woman who's faculty actually at School of Mines, I'll give her a shout out, Melissa at Gelsana, one of the companies we invested in. She also runs the company. Awesome. But a lot of those scientifically minded, deeply technical folks, they might not be the right one to be the CEO, and that's okay. So is there alignment and influence, right? Or is there butting of heads because the CEO can't get the original product person, or the person with the original idea out of the way? What is the cap table? What does the ownership look like? What's the board makeup? Because these things are substantial to understand. Is it going to be a working board? That's really important. I've seen businesses fail because they don't have working boards. And we have a few questions or some comments in the chat. So I might just ask Rachel, Lindsay, or Edong, if you ever want to come off of mute and chime in, like, you're welcome to, but I'm gonna, just because I have my screen share up working, I'm gonna keep going for now, but you're more than welcome. Or the person that asked the question, you're also welcome to. Let's talk about the messy cap table scenario. So what's a messy cap table? Remember that example I just gave where, maybe a founder's taking a bunch of small checks? That's messy. What if the business pivots and needs to recapitalize, meaning maybe take the valuation that they used to have and change it, meaning, change ownership positions because they really need to bring in new money and the original investment didn't work out the right way, but maybe those investors still participate, but their valuation goes down. So different things that can happen. Messy cap table scenarios, right? There's also a messy situation where maybe they don't have much cash, literally lights going out, next month if they can't close the round. So there was an example of this, and I'm sure there are many examples of this, but the one I'm thinking about, we invested. It was a really credible team. We knew them from, various networks and literally had done some, work in partnership with the chairman, who's a wonderful individual. I'm not going to call it out since I'm calling this a messy cap table, but really a great business. We were happy to invest. Institutional money, meaning those professional investors, they might not have been able to invest. It was maybe too hairy or too, complicated for them. We were able to invest. How exciting. Team dynamics, culture, right? Really significant stuff. We don't look the other way if women are being put down. We don't look the other way if we believe it's unhealthy as a culture, team environment. There was a specific company where we walked away from the pitch and we all felt uncomfortable as women. Well, there were men on the call too, but basically we talked about feeling uncomfortable and said, wow, that lead scientist, was he just disrespecting the CEO throughout that, meeting and that call? And we heard different perspectives and we were open to the idea of, well, is this functional? What's going on here? And we actually had one of our diverse women, one of our Black women in the group in healthcare. She said, hey, y'all, this is an amazing business. Other investors and people in the scientific community or the medical community, they're not going to think twice about this. And then we back channeled with the CEO, the woman, and we said, hey, is this okay? Is this healthy? Do you feel that you're able to manage this situation? And do you feel like, this is your business and this is within your control? And we got such great feedback. She said, thank you so much for asking. This is my management style because I'm so excited to be able to, basically take my, scientists and allow them to participate at this level. And that's my management. Wow. Talk about evolved thinking. We invested. By the way, we love that one. And they've done really well since in terms of other funding that they've received. So we ask tough questions. We don't look the other way, but it's not just a no. We dig in. Sometimes there's not a data room. Sometimes it's too early. Sometimes we still invest. There needs to be a deck. Okay, I'll tell you that. If they don't have the time to make a deck, I mean, that's a whole nother thing. What happens when we actually, get to the point where we say, you know what, we want to fund the deal? We're going to talk about after the check more in the next session, but quickly, high level, back of the envelope, we form an investment vehicle. It's called a syndication, or it's a LLC basically, that's She's Independent Investments, LLC 3 or, syndication 3 LLC. And that is how we're able to take in these smaller checks and, facilitate the filings and meet the regulatory requirements. I'm not going to get into it all now, but the idea that we're doing all that legal back end so that people can invest and participate with the smaller checks. We're gathering funding from investors, typically in the form of a wire. There's different deal docs that have to be executed, us with the investors, us with the, company that we're investing in as a syndication. There's more, but that's the, basics of funding the deal. So simple-ish, lots of logistics. Our COO, she's not going to tell you it's simple. Point is, we do all the things. All you need to recognize or understand is we're checking those boxes. You can invest. We're going to then get back to you with things like, taxes and all that, and we'll talk about that more later. So that was, what we had prepared for today's session. I have up a QR code for if you want to join a future office hours. We have a pitch event next week. We have a great lineup. You can check out our events on Luma. And then we also have some really great educational content that we've been, producing, invite you to attend live, but then also we'll put up on our YouTube channel for more education, such as these fireside chats we have with investors, founders, you name it. So with that, I guess I'll keep this up for just a second, but if you have questions, thoughts, I know it was quiet today. I know that I was a little all over with my screen share, so my apologies, but I'm seeing smiles. I'm seeing some head nods. I'm seeing people, somewhat engaged if I can assume. So with that, I'm going to stop the screen share. And if y'all have questions, really welcome questions or comments. How was it?
Really, thanks. Thanks so much. Sorry I was late. My call overran. It was really helpful. I actually had a question about the round being open for a long time. Is there a general time frame where that sets off red flags, or I was just curious
Great
about
question.
that.
And by the way, Trista, this is like our first time Zooming because we did a phone call, I think.
Yes.
Hi, this is
Hi.
great.
Yeah, I've been on a couple things, but quiet and stuff. So
Yeah, this is
yeah.
great. So it's tough. Like there could be rule of thumbs that you come up with. I also want to just say every situation could be, what's happening then. I don't want it to be like, oh my God, it's more than 6 months, don't do it. I think it's based on, again, funding environment, how tough is it? What kind of communication were they giving you? Did they sound strategic? Hey, you know, maybe there's some evolution or something that they're hearing, or is it the same old story that they're giving you? Is it excuse based, right? So I think there's a lot that goes into it. I really don't want to see a funding round open for more than like 9 months. But again, it's not a cut and dry, like it's just that. I think again it's very situational. But if somebody's like, again, you see that hubris of, oh, it's gonna be filled. And then it's like, it's still, but it's, and for many quarters later, like I want to see evolution. I want to see how do they show up, what's happening throughout the journey. Um, and are they strategic? And do they understand what's happening? Is it happening to them or are they leading the process? I think that's an important point.
Yeah. Okay, great. Thank you.
Yeah,
I think
great
that's
question.
I have a question. How long does the vetting process typically take?
Yeah, it's a great question too. You know, what I will say is, sometimes the process, if I'm just going to say this is our ideal scenario, right? We have 4 to 6 weeks after a pitch where we can run diligence and then, make a decision and not feel maybe rushed. Sometimes the company's like, the round is literally going to be closed. And like, we want you at She's Independent to participate. We love y'all. We love what you're about. But if it's going to be cut off at X date. So sometimes we have to speed that up. But I would say the actual diligence itself is probably weeks, but getting folks, the way we work is maybe Trista, maybe Rebecca, maybe Edung, like want to be a part of diligence. There's a process in our end of formally kicking it off and getting folks kind of up to speed on what they're doing, and then it's coming back to the group and debriefing. So all of that, I'd say, kind of 4 to 6 weeks, and then the funding is typically another couple of weeks because there's a lot to maneuver around or coordinate from the legal vehicle setup to collecting the money and all of that.
Thank you.
And by the way, no silly questions. Anything you want to ask, Salma, please.
How does a company submit a pitch to get into the pitch
Yeah, great
process?
question. So we will, you are a member, I believe. Are you a member? Right?
I'm
Oh,
participating in all your
no worries.
office hours, but I'm not an
No
official
worries.
member yet.
No worries.
Mhm.
I know your name, so I'm just assuming
Yeah.
you're a member. So as a member, we give a bunch of kind of resourcing and guides. We have what's called we call it a founder playbook that's external or public facing, that shares a bit more about us and then how things like our intake link. We can drop it here, but I will also share that investments at shesindependent.com, which is an email address that goes to the group of us. That have raised their hands saying, I want to be an investment kind of leader. I'm going to put this in the chat right now. That is something where you can also reach the team. So I'm putting that in the chat, and then maybe I'll ask if, I don't know, if Rachel might drop in something like the founder playbook. Oh, there we go. But we're always looking for new businesses. So we love the question. We really lean into, women and diverse owned. It's so funny because like up front, I did not know we'd be doing so much healthcare investing. We have so much great healthcare deal flow, but we also want other deal flow. So like I know sustainability and climate, like, there's other areas. We're not just quote unquote like impact investing per se, but we want to invest in other categories and industries too. Think of building a diversified portfolio, right? You don't want access to just like one thing in the portfolio. And gosh, that would have been a great thing to have talked about today. But now we're talking about it, right? It's like you don't just want exposure to one thing.
Got it.
Yeah.
Okay. I will say it is in healthcare, but
Oh,
sorry to disappoint you.
No, we love it. It's not a disappointment. Send it. I'm just making the point that we're excited about, different categories, even though I'll be honest, more than half of the deals that we've invested in as a group have been healthcare. You have a lot of healthcare folks in our group. We love the deals. And there are also, investors that are specific to or, really focused on and concentrated on healthcare. So they're also great to reach out to. I'm just making the point that people think sometimes we're just focused on healthcare because we've done a lot of those deals. I see Idong smiling, right? Idong, it's a good problem, right? We're doing some great deals in healthcare. But like we're happy to invest in other places as well.
Great. Thank you.
Yeah.
Take these.
So yeah,
There's a question in the chat, Natalie, about the range of amounts in checks
yes.
investors write.
Yeah. So what is the range of amounts in checks that investors write? So it's all over the place. I would say we've accepted and seen checks that, are at the minimum. So that's $2,500 for a first check if you're new investing with us. It's $5,000 minimum beyond the first check if you're newer to investing with us. We've had checks that, are $75,000. Truly, it's based on the individual. I would say the median or even probably similar to the mean is something around like $7,500. And I think something that we're seeing, and I want to call it out because I think a lot of times as women or folks that, didn't have support getting into this, earlier in our lives, it's about developing the investor mindset. And so at the end of the day, it may take years for you to feel like, wow, I'm actually an investor. Even though you're doing it, it may take years for you to start developing more confidence there. We're big advocates of thinking logically and thinking strategically. If you're building a portfolio and I'm going to make it up. Let's just say you have $1 million because that's one of the definitions that you could meet to become an accredited investor. If back of the envelope, 10% of your net worth, and we'll talk more about this next session, but if 10% of your net worth, can go into angel per se, right? To meet that, realizing it's risky, but it's, something you want exposure to, that's $100,000. So if you're building a portfolio of, 20 investments or 10 investments, you can just divide that and say, okay, well, actually, I'm going to build this over the next 5 or 10 years. So my net worth is $1 million today, but I'm thinking about, market returns and this and that. I'm going to say I'm going to have 1.5 million in 10 years. And I want, 10 investments. So maybe 150,000 divided by 10, and that's 15,000 a deal. I'm not saying you have to do that, right? But there are ways to back into and to start to step into what does it look like to build a portfolio based on your specific situation strategically. And everyone at some point is going to face imposter syndrome or phenomenon or, wow, like, I don't know, I feel like this is a little scary. Talk to people, but I'm literally writing a book right now. Do the thing and reinvent your mindset and change your mindset. But basically the idea being, unless you start showing up and taking action, right, your mindset around it isn't going to change. So range of checks is big. Any more thoughts, questions? This is a great group. And maybe I will, just for fun, because this is new, I'll drop even the landing page around the book. If you want updates, which just if you want updates, we won't spam you, but it's really exciting. And what I will also say about the book quickly, so we're thinking of including some investor stories. And so if you're mapping a path to angel or you're already an angel and you're stepping into your journey, just hearing some of those stories, because stories, it's not just about investing or what we look for when we invest. Stories are impactful for people who want to know more about, well, why might I want to invest, right? Your story, that's going to be game changing when you think about the people that you can impact. So where is this? I'm gonna get it. It's actually also accessible from our social media accounts like Instagram at she's an appendant _ there's like a link tree link so you can, get different links. Excited for the enthusiasm on the book. All right, I'm dropping in the chat right now. Still, it's navigating there, but it'll be there momentarily. And hey, I'm hoping all this momentum gets you really excited. And also check out yesterday's fireside. I think talking about things like social equity, and really showing up. I mean, this is how we change the inequities that exist. It's what are we doing? And by the way, it doesn't just have to be investing with a big check. There are ways to, start showing up like an investor and allocating like an investor even before you're accredited. We're big on that. The book link is in the chat. So I know we're a few minutes over the planned time for today, but I love that we still have some folks on. Hoping you enjoyed this. You're welcome to give feedback via Luma or reply back, Google reviews, whatever you're called to do. But we love doing the work, so thank you for being a part of it.
Thank you very much. It was really good.
Thanks, Natalie. Bye, everybody.
Thank you. See y'all soon. Hope you'll join for the next one.